Welcome to Striking an Option, the show that reveals the options you have to better navigate markets. I'm Jeff Kilburg, and I'm joined today by Scott Bauer. Hey there, Scott.
Hey there, Jeff. How are you?
I'm doing great, and it's interesting to see the markets resume higher, the higher end of the range. But with all the potential headwinds out there, my question to you is, can anything slow down the demand for equities?
Well, there definitely is a thirst for it, but there's a lot of headline risk out there. You know, you have the tariff talk, you have the Fed next week, you have OPEC, so there's a lot out there.
And what about G20 at the end of the month? Is that something you're really focused on too?
No doubt about it, and that's why the next 2-3 weeks until we at least get to July 4th here, I expect some volatility.
All right, great point. Well, let's get into this first lightning round. Are you ready?
All right.
Respect the range. Well, I just brought up the range. It's really interesting to see 2,700 in the S&P 500. We were just there a week ago Monday in the E-mini S&P 500. Now we're back above 2,900 in the E-mini S&P 500. Is this range something that you get excited about, Scott?
Well, you know, while it trades back and forth, a trader has to get excited about it because, as we're going to show here and as you were talking about, Jeff, you have to respect the range.
No, you're absolutely right. And we've seen a 7-day rally. What type of opportunity does a 7-day rally present?
So a way to potentially approach this opportunity is by selling an end of month, which is the June 28th expiration E-mini 2950 3,000 call spread. And this call spread will potentially allow an investor to collect about 10.5 ticks or $525.
No, this makes a lot of sense. And this is one of the tools in our toolbox when we get to the higher end of the range to really mitigate risk by collecting that $525 going all the way out to the month of June. Now also you could talk about using the micros here. Maybe there's an opportunity to use the E-mini micro as a contract to, again, mitigate risk. What are your thoughts? Is this a call spread or do you favor them both?
You could do both. I mean, the micros are a great product with lots of liquidity, and the fact that they're, 1/10 the size of the regular E-mini that's out there gives an investor a lot of flexibility.
Well, it's interesting. This call spread that I do like that you are just offering here, the June S&P 500 future contract was trading around 2906, and that at-the-money volatility, we talk a lot about the vol here on striking options, was 1360. So this presents a decent amount of premium for an investor to potentially collect.
Absolutely, and just like I said before, I expect that volatility to continue over the next few weeks.
Great stuff, Scott. And please remember, these are trade examples, not trade recommendations. Let's move into the second lightning round.
All right, let's do it.
Gold glitters. Well, it's interesting to see the movement in gold, Scott. Central bankers certainly are very involved in all the rhetoric with trade tariffs, and that is moving the price of gold.
No doubt about it. It's finally catching up to the market here, and the risk sensitivity, this is really an asset that people are flocking to in times of volatility.
And we talked about ranges before in the E-mini S&P 500. Let's talk about the range in gold. We just saw a near 1350 print. So the trade example I want to utilize, as we saw a little bit of weakness in gold, a little bit of strength in the U.S. dollar, I want to be a seller of the week 3 $1,300, $1,270 gold put spread. This put spread will allow an investor to potentially collect $90 and it expires on June 21st. This is all with the thought process, Scott, that I think gold stays elevated as central bankers are still in the room.
No doubt about it. And August futures were trading 1328 at the time, and at the money vol is almost 10.5, which allows an investor to get that kind of premium here.
Yeah, and just to further the why do you want to own gold at these levels, it's interesting to see the 1300. If you pull up a chart, it's been oscillating really in price discovery mode around 1300, but continues to see 1,300 as a support level and it's staying elevated. So as we see rhetoric going into G20, I think gold will hold that line, and this is a great reason why to sell a put spread and collect that money.
Absolutely agreed, and it's completely risk mitigated by the fact that it is a spread.
It's stopped out. To your point, under 1270. In the event we do see significant dollar strength, we will be out of this trade example. Scott, thanks as always for hopping on Striking Options, and please tune in every week as we will continue to strike options.